they likely to get erased? What are are the changes in rules impacting credit cards? Let's try and understand this a little deeper with Abhijeet Chakraborty, former MD and CEO at SBI Cards and Payment Services. He joins in on the show right now, and we also have with us Shweta Daptardar, Vice President, Lead Analyst, Diversified Financials at Elara Capital, joining in on the show. Good morning to both of you. Thanks for your time. But Abhijeet, if I could start off, the discussion with you. Card spends rose about 3% in May because of the holiday season, I guess, but it's still down when compared to the month of March. What do you think is impacting the credit card spending? Is it is this the impact which is in other sectors also sort of holding back customers?
You need to see the credit card spends over a period of entire year. So what happens is there are phases. There are phases of seasonality where there will be specific spend patterns coming up. Like you said, it may be travel during this quarter, followed by festive spends. Then there are spends related to various promotional and marketing schemes launched by different merchants. So these do have an influence. But what we need to see more is the trend of the spends on the regular basis. When I say regular basis, typically in card scenario, we say there are two types of spends, non-discretionary and discretionary. Non-discretionary is something which a card holder will in any case will be incurring that spend. Now it depends whether the spend is on the card or in cash or through other mode. Discretionary spend is periodical, depending upon the need created or an aspiration created. So what the card companies will typically look at is that how the non-discretionary spends, which are the regular spends of an individual, how they can move more over to the cards, followed by the discretionary spends, which are periodical, that add to the overall spends. So this is how typically the spends patterns works. So it will be better to look at year-on-year spends rather than month-on-month, which can vary over a period of time.
Shweta, what is your own take? The delinquencies in the sector were up by 30 basis points in Q4. But now there are reports of delinquencies coming down. Tell me, what's the on-ground situation? What is it that you've observed?
Yes, morning. So you're right, incremental delinquencies or the forward flows have been curbed to a larger extent in the credit card segment, apparently, but we cannot call out confidently saying that, look, the asset quality woes are completely behind, because credit card industry in our channel checks and understanding is also still sort of impacted from the vintage portfolios of 2023, 2024. Also, the new card issuances, although the behavior of the new customer acquisition is aligning with the expectations, apparently that's not big enough to materially bring about a radical change in asset quality improvement in the immediate periods. Having said that, we have to also come to the terms to the fact that things are different today as we saw, say, 3 to 4 years ago in the credit card industry. 3 to 4 year ago, we saw revolvers on a higher scale. So standalone credit card players like SBI Cards posting stronger ROAs and stronger revenue. Today, it has become that difficult to sort of focus on incremental business augmentation because of these asset quality challenges and also changes in the scenario. So yeah, we'll wait and watch, but clearly asset quality incremental forward flows have been curbed, but still under radar for full improvement, which we are still not seeing.
Abhijeet, given that there are no more options now available for credit card users, especially after the advent of UPI, do you think in general credit card growth could take an impact?
See, credit card growth will continue the way it is. I look at it in a different way. One is that let us look at CIBIL data, CIBIL footprint. CIBIL has 60 crore plus uh, unique records. That means 60 crore plus individuals have taken some form of credit or other. Compared to that, while we say that the cards in force are almost 11 crore, but actually, as per though no specific data is available in the domain, but then market expectations are the unique. These include the multi-carding, and the unique card holders will be around 7 crores. Even if it is 7 or 8 crores, whatever it is a significantly lower than the overall ecosystem where people have availed some form of credit or another. So what happens is credit card being still remaining a push product, it is yet to get that kind of a traction where um, people accept it as first as a mode of payment and then accept it as a uh, opportunistic credit line. So when that push product becomes has a pull effect, the credit card will trajectory will grow further. How we have seen the scenario changing over a period of time. More and more spending opportunities and more of a more uh, avenues of acceptance of cards coming up that will drive the acceptability of credit cards at the merchant level, opting of credit card by the individuals and the spending patterns. I'll give you an example. Few years back, we didn't hear about much about utility spends taking over through the credit cards. Then came the rentals, then came the education. So today, even municipal taxes you can pay through credit card. And when people understand the benefits of having a credit card where primarily one can be only a transactor and derive all the benefits associated with a credit card, it is there to stay and it is there to grow. And I always look at this wide gap between credit footprint in bureaus and actual credit card holders. Even if we have a drastic discount over that 60 crore plus data, we still have a wide gap. So the considering that it's a credit enabler, it will remain. UPI has facilitated definitely the and made easy life easy for the payments, but it has largely removed the cash. It has not removed credit card. Then you have the RuPay card also. You One can always use it along with the TPAP, integrate it, use the credit card, get the benefits of the RuPay credit card as well as get the benefits of UPI. So it's a win-win situation everywhere, and the outlook only looks better over and over.
Shweta, are you also expecting a turnaround in India's credit card segment going forward? And what do you think could be the triggers that could add to that?
Yes, definitely. Credit card industry, as even Mr. Chakraborty rightly pointed out, the penetration is much, much lower. The potential remains pretty higher. Apparently, currently, as we see in the near term, the industry is definitely undergoing or navigating certain distinct challenges. And we already spoke about that. The credit quality challenges and incremental credit card issuances have tad slowed since past 1.5 years. As we see going forward, once the asset quality woes are completely behind, we definitely see these new card issuances climbing up. As for now, we have seen for players like SBI cards, they have been focusing more on banker channel or banking upon the state bank or the parent company for new card issuances and less on open market channels, curbing the incremental balance sheet quality risk, asset quality risk. So as and when these risks are completely behind, we definitely see this traction back in reckoning. And that definitely will have a multiplier effect on the spends and therefore the revenue for the credit card companies. But that definitely is still a couple of quarters away. So we strongly believe that credit card space per se is still on radar for certain asset quality challenges on the unsecured side. But yes, the potential remains stronger structurally over next 2 to 3 years.
Shweta, what is the right way to, let's say, look at SBI credit cards? I mean, as an investor, that's only pure play. I remember when it went public, it was COVID time, so despite that, it had a great listing. But if one has to independently look at SBI cards, and I know Mr. Chakraborty is there, so we will not ask him how to value SBI credit card. But Shweta, as an investor, how should one look at it?
Yes, so Nikunj, today if you compare SBI card versus IPO days, then like I said in the beginning, things have changed drastically. Things have changed over the past 3 to 4 years. We were talking about high revolvers of 40% of the credit card receivables for SBI cards 3 years ago during IPO periods. And today it has dropped down to 24-25%. Incrementally, also, company has been cautious in taking undue risk on the balance sheet, and that has its impact on new card issuances. Also, juxtaposed to this, if you see the current valuations, SBI card is already trading little over 25x PE, price to earnings forward multiple. So at 25x, if you see for last couple of quarters, in anticipation of improvement in asset quality and the kind of mitigants that the company per se have put in place, the stock has already rallied fairly bit. So going forward, all eyes are on the business augmentation. I clearly and certainly believe the focus now in credit card industry has moved from asset quality woes to business augmentation obstacles. So I think we'll keep a watch on that. As on today, we certainly believe SBI card has a lot of potential, but from the valuation perspective, risk reward is slightly unfavorable.
What about the others, HDFC Bank, etc., Shweta?
Yeah, so banks are already back in reckoning. Like in Feb 2025, Kotak Mahindra Bank was back after the ban was lifted. So banks have also kickstarted. But see, look, SBI cards and banks are not a direct comparison because for banks, credit card is just one of their products in their entire product offerings or diversified product mix. Whereas for SBI cards, is bread and butter. Having said that, new card issuances have gradually picked up, but we'll closely monitor this momentum as we certainly believe there is still more room for improvement, and that's not seen as on today.
Abhijeet, I'm just going to throw this one more ingredient in the melting pot. If you look at credit card backend service providers, it is MasterCard and Visa. And Indian government is trying a lot to tilt it towards RuPay. Where do you think that trend changing? Where the back office is still, in a sense, or the payment gateway for Indian credit card companies is still dominated by a Visa or a MasterCard? Do you see that changing?
See, there is no network-related data available in the domain. But what we see is the increasing preference to the RuPay card also. How I look at it is that in tier 2 and more in tier 3, tier 2 cities onwards, tier 3 and even to tier 4, you won't find many POS machines, but then you will find the QR codes. So what happens is, as I just now stated, that if one has a RuPay card and links it to a TPAP, then you have an opportunity to have the benefit of a credit card and use the UPI benefits also. So these things have opened up the opportunities for RuPay, and for the issuers, it depends basically on the credit card variant, on depending upon what target audience they are looking at for a particular variant, and then launch it over the specific networks. So we don't foresee any bias, but then since the market is growing, there is enough room available in the market. A new player, RuPay having come in, will definitely have enough space to work upon, and that's what we are seeing, that issuers, all the banks, any credit card issuer, they have gone ahead and taken on the RuPay card, because there is a preference from the customers also, as I said, depending upon the geographical location of the customer.
All right. Thank you so much, Abhijeet, as well as Shweta, for joining us today and interacting with us and giving us a sense that what's really shaping up when it comes to the credit card industry. Thank you so much for that. But with this, viewers, let's move on and let's deep dive into the consumer space. As of late, we are seeing the agri-inflation cooling off substantially on a quarter-on-quarter basis. So if the companies cannot take a price hike because of the increased volume,